Investors are again stoking fears about a recovery in the global economy for obvious reasons. The rapid spread of the highly transmissible Delta coronavirus poses a new threat. Nevertheless, the economic calendar contains a few events to draw traders' attention away from the pandemic worries. Traders will be able to make conclusions about consumer activity in the euro area on the grounds of retail sales data from Germany, the powerhouse of the European economy. Market participants were caught off guard by a sharp decrease in retail sales in April due to new social and economic restrictions imposed in the second half of April, including a curfew and a shutdown of stores. Now, analysts predict a 5% growth in retail sales in May on month that will speed up an annual rate to 6.3%. Besides, the euro traders will be interested in revised manufacturing PMIs by market experts for advanced economies of the Eurozone and the UK. The final readings are expected to match the flash estimates, so the indexes will remain close to historic highs. This is certainly bullish for the popular European currencies. Apart from the market analytics group, similar information on the US manufacturing sector will be released by the Institute for Supply Management. The US production activity also holds an elevated levels, but a recovery in manufacturing is facing some headwinds. American factories sometimes are not able to meet beyond domestic demand, as they are having troubles with their hiring and keeping employees. To be aware of developments in the labor market, investors monitor weekly updates on unemployment claims. In these reports, employers frequently complain about difficulties in hiring due to generous unemployment benefits. The report, which is due this Thursday, will print the figures after several states cancelled handsome federal in unemployment insurance. Hence, the number of jobless claims is expected to contract to the lowest level since the pandemic outbreak. Speaking about the influence of such data on market sentiment, it's important to bear in mind that the weekly update will be followed by the official non-farm payrolls on the next day. So the highlight of the week is the government employment data, which is due on Friday. The consensus suggests that signs of a steady recovery in the US labor market will cheer up traders. Market participants will recall that the Federal Reserve puts a high priority on the employment situation rather than in inflation. Thus, the fact of declining jobless rates and solid employment growth could cement expectations for a rate hike and the likelihood that the Fed will draw up the agenda for moves towards a normal monetary policy. Such prospects are bullish for the US dollar. You were watching Forex Trader Calendar on InstaForex TV channel with me, Kate Tikhina. We wish you profitable deals.